In the equity quadrant, looking at a strong week in the June S&P. S&P futures finished their third consecutive week higher, up over 1.6%. But today's move was kind of muted. The high today, 52.64, was up a little bit less than 0.5%. The low, 52.32.75, was down a little bit more than 0.1%. We did make that up and turn positive again late in the session. There still is some time left in the session, but if we do finish higher today, this will be the 7th consecutive session of higher prices, meaning that since the April 19th swing low, the S&P will have risen somewhere in the range of about 5.6%. There was more bad news is good news U.S. economic data for the stock market today. The preliminary Michigan Consumer Sentiment Survey for May came out at a dismal 67.4 versus a forecast of 76 and a prior read of 77.2. This implies a potential consumer spending slowdown, which would actually help the Fed, and that's what I mean by bad news is good news. It would help them move forward with the rate cuts that the market now expects, and that subsequently puts a bid into equities. The only negative is that the inflation expectations were higher in both the long and the short term, higher than expected, but not by that much. The longer term was much more concerning, and that isn't really going to stop the equities from rallying if they think the Fed is going to cut rates, which right now they do. Speaking of the Fed, the New York Fed released its GDP nowcast this morning, and its estimates for the next quarter is sitting at a soft landing or Goldilocks 2.23% for U.S. GDP. Also, we had Dallas Fed President Lori Logan disagreeing that rates needed to be cut. Speaking at an event in New Orleans, she said it's just too early to think about cutting rates. I need to see some of these uncertainties resolved about the path we're on, and we need to remain very flexible about policy and continue to look at the data that's coming in and watch how financial conditions are evolving. This is probably why stocks didn't take off today. We also had Fed Governor Michelle Bowman speak, but she didn't mention rates. Lori Logan did.